Good morning. It's Wednesday, June 22nd. I'm Joe Elkier here with my colleague Tim Murphy. Welcome back to the Gold Spot. Tim, this week once again, no shortage of news about the economy, inflation, geopolitically. So much coming at us. Can you help bundle it up and kind of give us a good picture?
Yeah, I can try, Joe. It's a big deal right now what's happening. We're having major changes, and the biggest change is interest rates. If you go back 40 years, go back to 1980 when rates topped out at about 20%, they've been going down ever since, up until about 2 years ago. So that's a big deal because when you have 40-year trends that are breaking, it means that we're going to be going in the other direction for at least 10 years, maybe longer. So we should have 10 years of higher rates. And this is important for the markets because, as most people know, higher rates can hurt things. It hurts industry. It costs more to do business. Your mortgages can double, and monthly mortgages can double in size. So it's not good. So when you have higher interest rates, normally the cost of carry for gold is greater, and it's not good for gold as well. But the key is why are rates going higher? And as people know, it's because of inflation, and inflation is very good for gold and very good for silver, and it's all going to play out just like it did in the 1970s when we had stagflation, we had gold exploding and going higher in price as interest rates went higher as well. And the big difference now compared to 1970s is that our debt is so great. It's so massive. The trade deficit is at 30 billion. We can't pay for that, and higher interest rates is just gonna kill us further, and it's just gonna get worse and worse. And this is a long-term play: higher inflation, higher interest rates, higher gold.
So you were mentioning stagflation, and I'm starting to see more of those boxes get checked off. We've got a stagnating economy, higher inflation, and kind of the last piece of the puzzle is high unemployment. I know a friend of yours from back in your Wall Street days, Ray Dalio, has been speaking about that this week. Can you give us some insight into what he's saying?
Yeah, Ray sees the handwriting on the wall. He is the #1 fund manager. His company Bridgewater in the world, handling hundreds of billions of dollars. And Ray's been saying this and for some time now that we're going to see higher inflation, higher interest rates, and it's going to choke off the economy. And just like the 70s, we're going to see things really kick in, especially as the decade goes along. So expect higher interest rates, higher inflation, especially inflation from the supply side issues. We're going to see, as the summer plays out, even higher inflation. So just be prepared, and it's very positive for gold.
Change is upon us. Things are moving quickly. You buy gold and wait. You don't wait to buy gold. If you need some help, you need some information, reach out to us. Go to our website. We'll see you next week.